Breaking news tonight as tensions escalate between North American leaders, with Canadian Prime Minister Trudeau challenging former President Trump's trade policies, sending shockwaves through the automotive industry. Tesla's stock dropped 6% as markets react to the uncertainty. The Canadian government has positioned itself for a showdown with Tesla as trade relations between the nations enter turbulent waters. NDP lawmakers are proposing penalties and incentives that could reshape the North American automotive landscape. At issue is a proposed $10,000 rebate exclusively for electric vehicles manufactured in Canada, coupled with new tariffs targeting Tesla. This approach represents a response to Trump's trade policies, which have disrupted automotive supply chains. The North American automotive ecosystem has operated as a delicate balance for decades, explains analyst James Morrison. These tariffs threaten to unravel years of integrated manufacturing. The timing is challenging for Tesla CEO Elon Musk, who had counted on Pierre Poilievre as a potential ally. However, pressure from Canadian lawmakers may force even sympathetic politicians to take a harder stance against American automotive imports. The measures come in response to Trump's February 2025 tariffs, targeting Canada, Mexico, and China. These restrictions have caused disruption throughout the automotive supply chain. For Canadian consumers, these changes could mean shifts in electric vehicle pricing. Domestic manufacturers stand to gain advantage, while Tesla might lose market share in what has been a strong market. Industry experts warn that this escalation could trigger retaliatory measures from other trading partners, leading to trade restrictions affecting materials and finished vehicles. The impact could affect jobs and economic growth on both sides of the border. This situation highlights the interdependence of North American automotive manufacturing, where components often cross borders multiple times before completion. As tensions rise, consumers may face higher prices and fewer choices in both traditional and electric vehicles. Good evening, viewers. Tonight's top story focuses on escalating trade tensions reshaping the North American automotive landscape, particularly affecting Tesla's position in Canada. Canadian lawmakers are taking aim at Tesla with a new strategy. The New Democratic Party has proposed a $10,000 rebate for electric vehicles manufactured in Canada, while pushing for additional taxes on Tesla vehicles. This comes as a response to trade disputes initiated during the Trump administration. The Toronto government has removed Tesla from their grants program, impacting the American electric vehicle manufacturer. Public sentiment has turned against Tesla and Elon Musk in Canada, with thousands signing petitions to revoke Musk's Canadian citizenship. Market analysts are monitoring these developments, as Tesla holds a dominant position in Canada's electric vehicle market. The proposed taxes and incentives could significantly alter the competitive landscape, widening the price gap between Tesla vehicles and Canadian-manufactured alternatives. Industry experts suggest Tesla might need to establish manufacturing facilities in Canada to maintain its market position. This would help avoid additional taxes and potentially benefit from domestic production incentives, though it would deviate from Tesla's current global production strategy. These developments affect the entire North American automotive supply chain. As manufacturing costs rise and cross-border trade becomes complex, automotive companies are shifting their approach to production and market access. Tesla hasn't officially responded, but industry insiders expect similar strategies to those used during previous trade disputes with China. Will Tesla adapt to preserve its Canadian market share, or maintain its American manufacturing stance? Back to you in the studio. In a growing trade dispute across North America, Canadian lawmakers are considering measures against American automotive manufacturers, with Tesla particularly affected. This development comes as trade tensions between Canada and the United States escalate, potentially reshaping electric vehicle sales in Canada. The United States is our biggest trading partner, but we won't hesitate to defend our interests, declared Canadian officials, responding to President Trump's characterization of Canada as a backstabbing ally. The president's recent defense of tariffs, claiming they have exploited our country for years, has intensified diplomatic strain. The proposed measures could impact Tesla, Ford, and GM. The NDP's proposal for a $10,000 rebate exclusively for Canadian-manufactured electric vehicles adds complexity. This policy combines environmental consciousness with economic nationalism. Tesla faces challenges in this landscape. While luxury models might weather increased prices, Model 3 and Model Y vehicles could become less competitive. Market analysts suggest tariffs could push Canadian consumers toward domestic alternatives, including GM's EV models and Canadian startups. Elon Musk's Canadian connections have come under scrutiny. Despite being born in South Africa, Musk's previous Canadian citizenship and time in the country have become talking points, with some Canadians petitioning for citizenship revocation. Industry experts warn Tesla might need price cuts or marketing campaigns to maintain market share, affecting profitability. The company faces a difficult balance, maintaining competitiveness while handling increased tariff costs. This situation shows how trade policies affect corporate profits, consumer choices, diplomatic relations, and national industrial strategies. As Canada positions itself in this trade environment, the future of American automotive manufacturers in the Canadian market remains uncertain. Good evening, viewers. In a dramatic escalation of trade tensions between Canada and the United States, thousands of Canadians are calling for extraordinary measures against Tesla and Elon Musk. A nationwide petition demands the revocation of Musk's Canadian citizenship, highlighting growing public frustration with perceived American economic aggression. While the legal basis for such citizenship action remains questionable, it symbolizes deepening resentment toward Trump-aligned American business interests. The New Democratic Party, NDP, has proposed aggressive countermeasures targeting Tesla, including potential tariffs that could increase Model 3 and Model Y prices by $5,000 to $10,000. Toronto's government has already excluded Tesla from its electric vehicle grant program. This move signals a shift toward protecting domestic manufacturers and could herald broader policy changes. Industry analysts suggest these actions might create opportunities for Canadian EV startups, potentially reshaping North America's automotive landscape. Tesla is reportedly considering opening a factory in Canada. This strategic move, following their Shanghai Gigafactory model, could help the company navigate these trade challenges. By establishing local production, Tesla could potentially qualify as a Canadian manufacturer, avoiding tariffs and accessing government incentives. The broader context reveals a troubling pattern in North American trade relations. Trump's tariffs have affected multiple sectors beyond automotive, including logistics, agriculture, energy, and technology. This has led to renewed scrutiny of the USMCA trade agreement and raises concerns about a potential trade war. For Tesla, the choice seems clear: adapt to local manufacturing requirements or face significant market challenges in Canada. This situation raises fundamental questions about free trade principles and North American economic cooperation. As one analyst noted, economic realities often trump brand identity, even for the most American of companies. Stay tuned for updates on this developing story. Back to you in the studio. Good evening, viewers. Tonight's story focuses on the trade war reshaping North America's automotive landscape, particularly affecting Tesla in Canada. I'm your host with the latest developments. Canadian lawmakers are considering targeted measures against Tesla, marking an escalation in cross-border tensions. This isn't just about cars, it's about national sovereignty and economic security. Canadian politicians are contemplating special taxes and restrictions aimed at Tesla, potentially altering the company's presence in the Canadian market. This mirrors trade tensions seen in other global markets. The stakes are high for Elon Musk, whose Canadian citizenship has become a focal point. Petitions are circulating calling for its revocation, adding personal dimension to this trade dispute. Industry analysts warn of potential domino effects. If Canada implements these measures, retaliatory actions against Canadian automotive parts and vehicles could trigger a full-scale trade war across North America, affecting the entire automotive and EV ecosystem. Key questions emerge. Will Tesla concede to Canadian pressure and retreat? Or will they establish local manufacturing facilities? The company faces a strategic decision that could set precedents for international corporations. For viewers seeking automotive industry insights, this presents several scenarios worth watching. The resolution depends on three factors: Canadian Parliament's stance, public sentiment, and Tesla's willingness to compromise. Looking ahead, the North American automotive market faces continued turbulence, mirroring tensions seen in other markets experiencing economic transformation. Share your thoughts below. Will Tesla build a Canadian factory or make a strategic retreat? Subscribe for more updates on this developing story. Until next time, this is your trusted news source, keeping you informed.